I said in the very first attempt at this one that we, were running late.
We were.
Significantly late.
Yep.
A little later now.
A little bit later, yeah.
Secondly, I also stated that we were running on a lot of caffeine because it had been a long day in many respects. I also, I guess, for point C, mentioned that we may be running behind because you potentially are a bit of a hack.
A little bit, yeah.
And as it turns out, you didn't plug the microphone in.
So well, I did, just in the wrong
in the
slot.
wrong porthole.
The wrong porthole.
So we found ourselves restarting a podcast.
I'm
actually pretty psyched about the restart of the podcast, to be honest with you. You know what?
Start.
Yeah, so this is podcast number 21. I'm Cody from Wall Street Breakdown.
I'm Anthony from Wall Street Breakdown.
How was your week again? I'll ask you for a second time, knowing the answer.
Deja vu.
Switch it up. Give me a new answer.
It was horrible.
It was a horrible week.
week.
You had a date this weekend, didn't you?
I didn't get my face eaten off.
No, that's perfect, right? It's always strange meeting people that you don't necessarily...
Through the internet.
Yeah. I was going to say blind date, but you went all the way to the facts. And you've got your arm out of your cast.
Yes, that is probably the best thing that happened this week.
Freedom.
Freedom is right.
You've been liberated.
Yes.
No more ties that bind the arm.
No. Now I just got to learn how to use it again.
Yeah, absolutely. But you're getting there.
It's getting there. Yeah, I can bend to 90 degrees, so it's doing pretty good
There's
right now.
progress.
Just
progress. I like plugging this in properly.
Yes.
Right? Does it look good now?
It does.
Everything looks right, right?
It's got like a heartbeat going.
You can see, there's the EKG going as I talk into the microphone.
Exactly.
Thank heavens.
Yeah.
My week was...
I was going to ask you that. How was your week?
Well, since you've asked, it was mighty fine of you to ask. I had a good week. It's always a good week. It's never that bad. No matter really what happens. You kind of just roll with the punches. I mean... It is what it is. The markets had kind of a week. I had a bit better week than the markets did. It wasn't anything to write home about. There was no in-depth, significant paragraph entries into my diary this week.
Yes.
Yeah, but it was still a good week.
But there was an interesting thing that happened to you. Didn't you get a kind of a backhanded compliment today?
I did get a bit of a backhanded compliment. You know, I'm not that old.
No, you're not. No,
I'm a bit of a young man still, I'd like to think. 35 years old isn't that old.
No.
I'd like
not to this age.
The audience out there, implore me. Have a little empathy for me at least. You know, like you bear a little bit of this burden with me. If you're young, you know, just honestly, keep it quiet. If you're younger than me, don't make this worse than it is. I was told that I look good. Not the finality to the sentence.
No.
I look good. For my age.
Ouch!
How old do I look? You say that to a 70-year-old that you think is 60. Yeah. And they say, oh, I'm 71, and you look great for your age.
Yeah.
You don't say that to a 35-year-old man who looks good.
No.
I would like to think in comparison to a guy who doesn't plug a microphone into a cell phone, I'd like to think I look pretty good in comparison.
I would say so too, yeah.
Yeah, backhanded compliment.
Yeah, that's
that hurt
rude.
Below
Harsh.
the belt. Yeah. How don't you get your age off your lips there?
Yeah.
Don't mention my age.
How dare you?
Harsh.
Harsh.
That's harsh. That hurts.
It does.
Yeah,
it, really
does. It just reminds me that I'm getting old.
Yeah.
Am I really getting that old? Do I look old to you?
No, you don't. No.
I don't.
No.
I feel old now.
Do you? For that compliment? Yeah.
Yeah. It was like I took.
It's uncalled for.
I took a little bit of the. Took a little bit of it, and it's kind of permeating now. Now I feel old. My hips hurt. Yeah. All the stuff. Yeah. I think I found a liver spot when I was.
No.
I'm telling you, right? It's all starting to come apart here today. Let's focus on something that never gets old. Let's focus on making some money.
Let's do that.
Was there money to be made out there in the stock market this week? How about I let you lead this podcast, this one?
All right.
I've let you lead the previous 20. I'll let you lead 21. But if you don't plug this in again, I'm gonna find some other fella to lead this from now on.
Okay.
A younger one.
Oh.
Because you look good for your age, but I could do better. I could do better.
Definitely.
Just saying. So go ahead. You lead, sir. Take it from here. Anthony from Wall Street Breakdown.
This week on Wall Street, number 21, attempt 2. Let's do this. Okay, so the markets gave us a bit back this week, didn't they?
Little bit, right?
Yeah.
I mean, we're at a top.
They're a little bit generous.
We talked. We're at a top. It's a little fluffy out here. Price to earnings are out of whack. It's going to end up happening. The Dow Jones down 1.5%, 24,946. S&P down 1.2%, 2,752. Nasdaq down 1%, 7,481. TSX was up 15,711, up a little bit. 9 of 11 S&P sectors down on the week. It's fluffy. We discussed this. You're going to find these weeks. That's just what's going to happen. It wasn't an egregious number on any level. Nobody was down because anything out of whack is going on. Like, I understand they mentioned a few things going on with the government and some tariff things that are impacting the marketplace. And we give that as much credibility as it deserves. But I think we've discussed this, and I think we both agree that in weeks when there's not a lot of news, the market makes hay of almost anything.
They do.
They like to do this. And when you're at a top, and you've had weeks that have been up the last few weeks, where we're making up ground that we probably shouldn't have lost in that big drop-off, you're going to find that, you're going to have some bumpy roads sometimes.
You are. It's eventually
price to earnings are way out of whack. We're at a top. 1.5% or 1% corrections aren't even really corrections. I think that's just numbers moving around for the most part. Yeah. You know, like sometimes there really is just, a 1 or 2% move to the upside or downside that's really nothing more than just some trading. It is what it is.
Yeah, it is.
Yeah, so I wouldn't make too much out of it. And I think there's a lot of actual data out there that says that the inflows into the marketplace are as strong as they've ever been still. So it's not a matter of any kind of retail investors or institutional investors or anybody else being scared off. They think that this market still has a long way to run. And the numbers out there for the inflows back all that up, because we're at record numbers for inflows and stuff, right? So the markets, there's still a long way to run. But we've got a lot, like we've discussed in the past, a lot of these earnings are just priced in a little further out than we normally do. It's historically out of range, but will that be the new norm? We're not entirely sure. That might actually just be the new norm of the market, because the market's very healthy, the economy is very healthy, the earnings have been priced out very much in the future, and we've seen that as that's knocked price to earnings in every sector historically out of normal ranges. But it's out of historical ranges for almost every sector across the board, and still very sustainable. This 1%, 1.5% dump in a week, that doesn't scream unsustainable.
No,
that just lets you know that the market's having, it's got a little bit of indigestion, so it goes through some fluctuations every once in a while, and that stuff's bound to happen at the top. But we're fine. We're totally fine. Everything is gravy. And you let it ride. I mean, we actually heard that exact sentiment given earlier in the week by a new appointee of the Donald Trump regime. Absolutely, right? And we'll get into that, but you should let it ride when the marketplace is good.
Sure, definitely.
Let it ride. Things are fine. Inflow's good. Everything. Sentiment's down a little bit from last week, but up overall. I mean, up so much. There's no fear. Why have fear? Things are good. Sectors are great. The economy's great. No fear.
No fear.
Second attempt, even if this microphone unplugs, buddy, the third attempt will be even better than the second.
Markets are
great. Yeah. Markets are great.
Markets, major commodities were pretty stable, except for our favorite topic, Bitcoin.
Yeah. Okay, so gold 1313 down a bit, right?
A little bit.
Give a bit of credit. That's a bit of a fluctuation.
That
in gold
is,
1313, right? We're down a little bit. Oil, 62.19 was down a little bit earlier in the week. It averaged out to about what it was last week, down just a touch, marginal, a little bit. Bitcoin, though, it was at 7,500 when we went for cardio this afternoon.
It was.
It's a little over $8,000 right now. By the time this gets up at 1 in the morning, or who knows, whenever you listen to this, Monday morning, we're a little bit late.
Sorry, yeah.
Bear with us. I'm trying to talk as fast as I can so I can get the most out, but then I'm having to clarify to you that we're going to be a little bit late. So now you see how I'm just kind of like losing a little bit of time as well. So I'm like working with you, but I'm also kind of working against you. Bear with us. It'll probably be up Monday morning. Bitcoin in the afternoon, 7,500, 81 something right now, 7:45, 7:30 at night, whatever time it is. Bitcoin fluctuates too much.
Way too much.
Yeah, blockchain much more reliable than Bitcoin. Blockchain getting the good coverage.
They are right now.
Bitcoin not, and cryptocurrencies as a whole getting a lot of bad stuff. There's actually a Facebook alphabet sort of a thing about blocking some cryptocurrency stuff. I'll get into a little bit later
Yeah.
as well. Yeah, so Bitcoin fluctuating in a negative way. Imagine if those people convinced you to get in at 18,000 where those guys are now. They're telling you to buy still now. HODL, HODL, right? To keep holding on to your dreams, bro. You know, like just whatever.
On,
whatever. Yeah.
Don't ride it out. Do what you got to do.
What a foolish thing, right? Like to believe in something so emotionally that you
believe in something that nobody wants to use in the first place.
I think this goes back to the conversation that we had about emotional investment in something.
Yes.
And to buy into something not for the idea of making money. That's ultimately what this comes down to.
Yeah.
It's one simple premise. You buy something with the idea that that will increase in value because of the things they're doing in respect to the things that other companies in their field are doing. And then that field is also doing well in an economy that's doing well.
Yes.
Everything works, and then that company increases in value. But when you look at this, I don't see an increase. I don't see a reason for it. And you just don't get the same. Yeah, it's not the same. There's no reason for.
There is no.
Yeah, it's just not there, right?
No.
The increase in value just doesn't represent a tangible thing. So people try to get you in on something and they want you to believe, and you're emotionally invested in something, and that's the wrong reason to be invested.
Yeah.
You know, like you need to be invested solely for the purpose of, you know, the return. The monetary return. The minute you get your mind trapped in ideals of where things could go in your made up mental utopia is going to derail your investing career, because then you take Bitcoin from 18 grand on a slide to 8 and find yourself scrambling for answers, I imagine, and then grasping onto these HODL straws and saying like, I'll hodl forever. Why? Why would you do that? You know, like there's no reason. There's no implementation.
No.
And when you see the growth in another company, and like we said, if you're up enough, I mean, you take money off the table, because it just becomes it becomes when you start holding on to things long past being greedy, or long past having your emotions involved, well past what your, you know, like the perspective of making money is, you've lost the script. You're well off script.
You're too
now.
Emotionally invested in it.
You're too just diluted in one way or the other to not be focused on what you're ultimately focused on, which is using these as a monetary vehicle. I want to take this amount of money from here to wherever it should go for the upside, and in that interim, if that upside happens to come sooner than later, take it. And if that upside seems to go away and there's a visible downside involved now, hedge your risk as much as you can. Get out of something. There's no reason to be and Bitcoin has become this emotional investment that people are believing in because of ideals.
They backed it so much.
They did.
They pounded
it
so
man.
much. And
it's rough. I feel bad for people invested in it, because it's a sucker's game. Like, and the people that got in at the top are the ones that are probably they're the most they were the most susceptible, clearly. And now they're the ones that need it the most to be real. And I don't think they even know a good majority of them know why they got in it, other than it was just popular in the mainstream. And I think we talked about this when it was going on, that the mainstream is what it pushed it. It pushed it so severely that it made it like a viable thing. The CBOE and everybody making it, a futures contract. All of a sudden, it was all this tangible, and there was no reason for it to be that tangible.
Right.
It was something that should still have remained underground and not been given the validity, the credibility on a mainstream level. And it was. And now you take a look at it, and it's pulled back 50% plus, dude.
Yeah, that's
seriously.
Yeah.
Come to Jesus already.
Like
can we get over
something?
this? Yeah. Seriously. It's come to Jesus time.
It is.
Let
Really
it go.
Yeah.
Let it go.
Just let it die and disappear into the night.
It's not it's scary. It's
scary.
It's scary that in an economy when things are so good, people get lost.
And they want to go do that.
In this kind of stuff. It's bad enough when you get emotionally invested into owning Boeing or Caterpillar. And like, if you've been in Boeing for the last year and you're up, whatever ridiculous percent Boeing's
Right,
up, and
yeah.
you're not out of Boeing now already and taking your gains off the table, even you're too greedy.
Oh,
Regardless
yeah, yeah.
of what Boeing's upside is.
Yeah,
You're still, I
definitely.
think, far too greedy. You could have been playing strictly with House's money in that investment now, having, you know, a 30% of the shares or whatever only, and taken all your money out of it and been okay. Then I agree with you. But if you're still all in with your cash, you're ridiculous there too. But this even more so. If you were in with this for anything more than speculative anything, and then you're still believing in this now, and you're down and you haven't got out, Yikes.
Right.
If you see this if you're on the complete flip side of it and you see it differently than me entirely, and you see 81.68, which is what it's at right now, as an entry point, okay. If that's what you think, I don't believe it is. And I wouldn't, there's not a nickel I'd put on it, let alone $8,000. But if you see it, another investor, and you can justify it to yourself, fine. But if you've ridden it down from the high teens down to here and you're still in it buying into this,
yeah.
you're off script, man. I
You
don't
are,
know what to
yeah.
tell you, but you're not investing anymore.
No,
you're
not,
emotionally attached to this because you took a loss. Take your L like a man, step out of your position.
Yeah,
for
exactly.
real.
Yeah.
Bitcoin up and down. Yeah, we cover it only because sometimes I get on these rants, I think.
Yeah. Since we're on the topic of currency, the Fed wants inflation to go up, and of course CPI
Well,
numbers
that's
are
not.
up too.
What does that have to do with currencies?
Well, that's inflation, right?
Well, I guess CPI is up, right? So consumer price index up 0.2% month over month, in line with the estimate, up 1.8% year over year, estimate 1.9%. So obviously still not in that 2% number range that the Fed's looking for, but inflation's still climbing up.
Yeah.
Obviously we're talking core CPI here, right? So we're not talking food and energy and that kind of stuff. But the stuff that's down, that's not holding up its end of the bargain here as far as inflation goes, is rents, hotels, television subscriptions, and prescription drugs all down. Obviously, television subscriptions, we know, are something that's slowly dwindling away in the marketplace.
Yes,
So as that being a part of the basket, that's obviously going to take a bit of a hit. Prescription drugs going down just goes to show that there's a lot more options out there and things are getting a little bit cheaper. Right? There's a lot more options. Things are getting cheaper. Prescription drugs aren't holding up their end of the CPI, but that's good for the consumer ultimately. So like on that end, I think if CPI can make it up somewhere else, I think it's better. Ultimately, I kind of want a 70-year-old lady who looks good for her age, mind you,
Yes.
to be able to afford the prescription drugs on a fixed income, as opposed to being able to afford some other stuff that falls into the CPI. So if prescription drugs have to relinquish a little bit of their margin, their share in the CPI, I'm okay with that one. Because that's one of the ones where that's quality of life, right? Like you don't need some other stuff in the CPI. You can still take lesser quality and be okay. But with that, when it comes to things like prescription drugs, it's not really a lesser quality option sometimes. Sometimes that becomes like a quality of life option. So if that prices for that were a little bit lower, I think I'm okay with that. But core CPI overall up 0.2% month over month. Fed's got to be a little bit happy. Obviously, the talking points coming off of this is the Feds might raise interest rates 4 times instead of 3 in the year 2018, and we'll see Jerome Powell. We're going to see what exactly the Fed wants to do. New chair, obviously, at the Fed there. We will see what the plan is. They were a lot more transparent. We heard the Fed might do live interviews after every Fed meeting.
That's right.
As opposed to, was it every second?
Something like that, yeah. It'd be like right after they'd be doing like a live Q&A session.
Yeah, exactly. Which might be better. A little more transparent, a little more interday. Remove some of the interday erraticacy that's involved in when the Fed minutes are released a couple weeks later from those closed Fed meetings. You just get them out there and they just talk about whatever. I don't see why not. Just get. People are so worried about the monetary system and the hands-on policy. Talk to the guys that are hands-on. Let those guys have discussion. Maybe that's the best way to do it, is to have those guys be out front and center and talking about economic policy and why they're doing what they're doing, and have people questioning them like live, right? And have the people feel like they actually see what's going on. Because personally, I think, and I know you go on YouTube and you watch conspiracy videos on the Federal Reserve. It's the devil, right? Like, but in all honesty, when you watch, it doesn't matter who it was, Yellen, Bernanke, it didn't matter who it was that was in charge. Powell now, like, they all seem like they've got their head on straight. They are really trying to do a solid job of that and helping the economy. So, yeah, 4 interest rate hikes? Potentially, but there you go. So core CPI up 0.2% month over month.
That's not too bad, I guess. Well, the Senate votes to ease the Dodd Frank.
They are. So that brings Congress a step closer to rewriting this law. Dodd Frank obviously put in place after the economic crisis through the Obama administration. Dodd Frank basically regulates a lot of the banking industry. It regulates what the banks are allowed to be able to do as far as proprietary trading, what's basically considered too big to fail. There's a bunch of things involved. What they're trying to get reviewed and is actually being, so like we said, it's one step closer to actually Congress passing this as law, is the systemic importance of banks. They want that increased from basically too big to fail again. So from $50 billion to $250 billion. So you have to be a much bigger bank.
Right.
So you can't, right? So they're just looking to scale this up, but in return, they're looking for a little bit of easing on the other end where, banks aren't allowed to trade at their prop desk the same way they used to be able to. You can't go out and take the kind of risk that you used to be able to at your proprietary trading desk near what there was in the Bush administration or before that. What they're looking is to get banks $10 billion in less in assets to be able to be exempt from the proprietary trading desk rules, which will basically give them a lot more leverage to put more risk on the table if they want. So and a lot of those banks are clearly not going to, they're going to be considered, a bank with $10 billion in assets is going to be considered a speculative investment as far as being an investor if it was a publicly traded company anyways, right? And a bank at $250 billion, obviously not speculative. You don't want a bank that size out there trading at their prop desk with the risk just cranked right to the top.
No.
So you can't have JP Morgan or Goldman or any of those guys doing it, but a $10 billion asset bank and under will have the ability to have risk turned on to a new extent at the prop desk, giving them a chance to make more earnings in up markets like this, because when you're allowed to turn risk on, you're allowed to, go out there and speculate a little stronger and not maybe diversify as stringently as you might have to in industry standard wise.
Sure, right.
So you're allowed to go out and do that kind of stuff. So the U.S. Senate passing this, that's going to move this one more step down the chain, and I can imagine a Republican government. We're looking to get this done. Capitalism is on the menu right now in 2018 in the United States. It just helps smaller banks get bigger, right? Like, you're going to have banks that end up they're going to take hits because they're going to make wrong bets, but you're going to have banks that make good bets in good markets and end up building themselves out of that range, that $10 billion range, but making themselves a stronger asset ultimately regionally, because any bank that's a $10 billion asset bank is going to be a regional bank, but it's going to make a stronger bank overall. What's wrong with that? I don't see anything wrong with that, and I don't see anything wrong with the bank systemic importance, too big to fail number increasing from 50 billion to 250 billion, because 50 billion now there's a lot of companies that have crossed into that threshold now, and they're not actually too big to fail. So it's time to really increase that and get back to basically your big banks. It's basically the ones that you know and love. Your JP Morgans and your Citigroups and stuff, right? Those are going to be the ones.
What else happened in the market this week?
There's been, a bunch of stuff. Chain store sales up 2.9%. March sales are estimated to be up 3.8%. But we still see, department store sales are down and stuff like that. So there's, it's a mixed bag out there for retail, as retail sales overall are actually down in the month of February. And they've been down for a few months in a row. I think they've been down 3 straight months. Yeah, retail sales down in February 0.1% versus up 0.3% estimate. Department stores down 0.9% month over month. So you see chain store sales up, but retail sales down. Some of the retail sales, like clothing companies, are actually doing really well. We've seen that in some of the earnings. But it's really a mixed bag out there as far as where consumers are choosing to spend their money. Obviously, there's a lot of options out there nowadays where you can spend your money. So obviously, department stores are down. But a company like Amazon continues to report record, sales online. Where that money's going. It's not that the money's not out there. It's just that the money's been reallocated in a different direction, and it obviously shows up in these numbers continuing to struggle sometimes.
Whoa, for
Chain store sales continue to be strong, though. The U.S. set some duties on Canadian paper. I guess what was going on was the Canadian forestry industry, they've been selling underpriced uncoated groundwood paper. So they've been selling underpriced. So that's basically the market has a standard. This is much like the Boeing dispute with Bombardier about Delta buying planes under market value.
That's right.
So in the paper industry, in the forestry industry, same thing. So they've been selling stuff under the actual value of it, under the price to get it moved into the marketplace, right? So they're creating revenue, but they're losing a little money on this. It drums up business though. It looks good on the balance sheet because you're moving stuff, right? Because you're probably getting this in accordance with something else that you're doing, and this is probably like a byproduct.
Right, yeah.
So you're moving it out, but they're going to end up getting hit with some pretty significant duties, I guess, from the U.S. side. But Canada, late in the week, has requested a meeting with the World Trade Organization settlement body on March 27th in regards to finding some sort of a working agreement around this. But this all comes from Donald Trump and the administration saying like they are not going to let trade laws that impact their country get usurped by anybody else. They're not having it. They are going to be as strict as is humanly possible in making sure that these laws are followed, right to the letter. And they want their due, right? Pay me my money. Right, they're like ODB, right? Like they want that money, bro. Don't play with Trump.
No, do not play
right?
Trump,
Like
no.
it doesn't matter, adult film star or not. He'll sue you back.
Oh yeah.
He ain't playing, right? That guy don't play. He's not. You start messing with the U.S. I mean, we're Canadian, but apparently those guys cutting down trees in B.C. have been trying to undermine the system, and that is not going to work out well because Uncle Sam has come to collect, and he does not play.
No, he does not.
On the same note as that, we've had Trudeau come out this week and say he thanks Trump for adding them into the exemption for the steel tariffs, adding Canada into the exemption, and said that it doesn't feel like any of the exemption stuff is like a bit of a payback for NAFTA not having an agreement right now. He still feels like those are two separate things. He felt like the steel exemption, the tariff exemption was just a part of the good trade agreement that the U.S. and Canada have, but really figured it had no impact on NAFTA, which I think we've talked about. I think the U.S. is waiting for NAFTA to be the right agreement for them. They don't need it as much as the other countries involved. So good on Trudeau for coming out and giving Trump a little bit of credit for
no, for sure.
Because Trudeau seems to ruffle a lot more feathers down south than he needs to, and that guy doesn't have a lot of pull.
No,
he's a bit of a joke.
Oh, he is a joke.
Like I know they think Trump's a joke down there, but at least Trump's got things moving. Trudeau's got nothing going on up here.
No, nothing.
Right? Things are a failure up here in regards to our federal government. MBA mortgage applications, composite index up 0.9% versus 0.3% last week. Purchase index up 3% versus 6% last week. The refinance down 2% versus down 1% last week. And the 30-year mortgage up again 4.69% versus 4.65% last week. The 30-year continues to climb and climb and climb from 4.23 2 months ago to 4.69. You can't tell me that inflation isn't taking some sort of hold. GDP now had the GDP for the U.S. at 5.6%? That was 6 weeks ago.
Yeah.
Then it was 4% about 4 weeks ago. Then it was 2.5. Then it was 2.4. Now it's 1.9. So that's not really a good sign. But I'm not also taking GDP Now's forecast for GDP to be really effective. It kind of seemed like they suck at their job.
Just writing down numbers.
Like they're just throwing out just any number they want, right?
Yeah.
Like they're just like when they came out with the 5+ number, I think people thought like these guys have hit their head. And now like 1.9, like I look at it and go like, well, that GDP number does sound a lot more logical. But these are also the same guys that said 5.4. These guys have surely hit their head, right? Like, I can't rely on any of this. So GDP Now,
who knows?
Good luck with your trauma. Try to figure that out. I don't know really what to make of it. Hide your hair. Jobless claims, initial jobless claims down 4,000, 226,000 overall. Continuous claims up 4,000 to 1.879 million. Both very small changes. Normally we see double-digit changes on both those. Very, very small. The economy's doing great. What did we see from Goldman? We see from Goldman and JP, they came out with the same report, said they saw unemployment was going to be under 3% for the first time in 65 years by 2020.
2019 was going to be 3.25%, and after that, it was a couple more years after that, down to 3%.
Pretty significant.
3%,
Pretty significant
forecasting.
2019. Pretty significant forecasting from, and I mean, Just like they say, just like I'm going to take a drink, powered by Monster. Shout out to Monster. I'm going to take a drink because I re-energize as we knock it through the markets here.
Yeah, but that's the lowest in 65 years, though. That's
would be.
It's
already bloody low, man.
Yes.
Like, but I mean, I know they say, okay, economists aren't very good at predicting the marketplace. These guys are more market predictors over at JP Morgan and Goldman. They do have guys that are economists. Maybe not as good as predicting the economy, but I mean, positivity is up.
Oh, yeah.
That's the main thing, is the positivity is just brimming. It's just, it's palatable. You know what I mean? You can taste it in the air that everything is so good. People are enjoying themselves in the marketplaces. Every analyst that has something negative to say has to then go out and tell you 3 positives about other things because there's way more positive than negative. So I love it. Larry Kudlow, you know Larry Kudlow is CNBC, been on there forever. Kudlow and Kramer, yeah, Kudlow been on there forever and ever. He's moving on. He's moving on from CNBC.
Does he say where he's going?
Yeah, he's the new economic advisor in the White House for Donald Trump.
Well, that's a big step up.
Big step up from CNBC. Knows what he's doing.
Oh, for sure, yeah, definitely.
Really smart. I mean, Kudlow and Kramer. I mean, we're Jim Kramer, right? That's that. I mean, it's good stuff. It's good stuff, man. You know, like he has a real purported Fox News bias.
Yeah.
Trump, you know, and he didn't go to Fox News. He went to CNBC. Larry Kudlow knows what he's doing, man. Economic advisor to the White House. He said in the first little bit of talking that he's done, he said that the Fed should leave, just let the market do its thing. Do the interest rate hikes. If you got to do 4, if the Fed sees it, if they know what they're doing, if 4 is there, do it. But the market's good. Let the market do its thing. Like, believe in the market. It really is as good as it is. And I believe in that. Like I said, another number coming up here that we're going to talk about believes in the same thing. The history books don't lie. That there is ebbs and flows.
Oh, yeah.
That markets that go up ultimately go down, and markets that go down ultimately go up. But we've had runs before that have gone on for a generation. Good runs and bad ones. You're in the middle of a good run.
History repeats itself, right?
You're in the middle of a good run. Yeah. Don't squander it. You know, like you gotta bask in things sometimes and not always look for the negative.
Yeah,
the glass is definitely half full in this instance. Glass is half full. Housing starts in February, 1.236 million versus 1.285 million estimate. So missed the estimate just a little bit. Housing starts probably getting dinged up a little, maybe not yet. We're not going to see it yet. You're probably going to see permits and stuff start to get dinged up as the 30-year goes up, and we're going to start seeing there's going to be a lot more inventory on the end of the housing, the actual builders. So you're going to see a lot more inventory pile up slowly. So you're going to see building permits and housing starts start to slow down a little bit, I can imagine. Job openings, 6.312 million in January versus 5.8 million estimate. Oh, there's a lot of jobs out there.
There is.
There's a lot of jobs. Things are doing really well. You got the option to change jobs, do whatever the heck you want. Go out there. You can be a circus clown, be a pro wrestler. I want to be a pro wrestler. You think that job's open? You think I look too good for my age to be a pro wrestler, maybe the heavyweight champ of the world?
I think you could do it.
I got the heavyweight part.
Oh, for sure.
Yeah, absolutely, right? I think, I don't know. They might not like my.
Might be time for a career change.
I don't think my nutritional regimen falls into their wellness policy.
Probably not.
I don't think it does.
No.
Record U.S. inflows into the marketplace last week, in the week ending Thursday, $43.3 billion in inflows. So tell me again, who doesn't believe in the market?
Yeah, exactly.
Do you hear the crickets? That's all there is that's a clock actually ticking. But still, that's the doomsday clock ticking down to our ultimate demise. Hellfire and brimstone, my friend. No, it's ticking away the minutes people aren't invested in a marketplace. It's doing great. $43.3 billion in inflows. That's right. Record inflows in the week. Things are doing phenomenally. We continue to, but unfortunately, U.S. national debt is up 21 trillion. Crossed 21 trillion for the first time ever.
Holy!
Crossed 20 trillion just 6 months ago.
Yeah.
Going up pretty fast.
That's a phenomenal number. 21 trillion.
Oh, a couple dollars.
That's
they owe a couple dollars, right? Yes. That is a significant amount of money that will never be paid.
Probably not.
Never. No. None of that's ever going to do anything. Right. I think that number is Like, it's not even relevant.
It's too astronomical.
Does it impact anything? Have we ever seen that, like, impact? Like, I'm sure, okay, it grows in times of, like, even now when we talk trade war with China, right? We talk, we're going to get into this. You want to talk, here, wait. Okay, we're going to talk. We're going to go back to national debt. Toronto housing starts, or sales. Toronto, hottest housing market in Canada, no doubt. Housing last year, oh my, in the first quarter, housing was ridiculous in Toronto.
It was.
Like, it was ridiculous. Prices were going up something crazy. In February, housing sales down year over year, 34.9%.
Ouch.
Because last year's first quarter, like I said, was ridiculous, right? Overall average selling price, $767,000. That's down 12.4% year over year, but it's still up from January last month. That was like 730-some thousand. So it's climbing a little bit, but it's down from last year's ridiculousness. So we're getting, I don't know, I guess a settling of the market in Toronto.
Maybe a little bit,
It still really looks overpriced.
Yeah.
Who really wants to live in the GTA? Have you ever been to Toronto?
No, I never.
I've been to Toronto. Like, it's yeah. I don't know.
I've never been there.
Unless you, like, work there, like, unless there's, like, a thing, like, I just don't see the draw. Like, it's just the city.
Yeah.
It's just a big metropolis. Like, I get the bees. I get living in Vancouver.
Me too.
I've been to Vancouver. I guess I'm from the Lower Mainland. Right. I'm not biased. I live in the prairies, right? Yeah. Like, we live in the prairies. Yeah, we live in the tundra, so obviously I have no bias, right? I can't say a thing. Where we live is horrible. It's horrible. Yeah, this is just cold wind blowing.
Oh yeah.
But like, you talk about Vancouver, you could ski and go to the beach in the same day. The ocean's right there. In Toronto, it's cold off that water. It's big. It's really big. It's expensive, but like, it doesn't look like any other, like, other than like a few things, like, there's nothing that stands out in Toronto.
Yeah, just Toronto to go there.
Yeah, they have a lot of major events and stuff. Like, Toronto really.
Oh no, for sure.
Right? I don't know. I've been there lots. Like, I used to be a financial advisor. I guess we'll talk.
Yeah.
Used to be a financial advisor for biggest private brokerage in the world. Maybe, possibly, could have been one of those guys. Somebody. It's a guy's name. Let's say that it's a gentleman's name. Or two names put together.
Exactly,
based out of Missouri. Yeah.
Do your guys' homework.
Yeah, do your homework, right? Yeah. So anyways, I was in and out of Mississauga all the time. Their Canadian offices are in Mississauga.
That's right.
And you go out there and do a whole lot of time. You do, deep.
Time.
You're doing time. Oh, it's nonstop. Yeah, it's crash. It's rough to go into a lot of classes where, I'm not going to toot my own horn, but you look at a lot of your contemporaries and you're like, you're just not on the level for this. Like, I get why we have to do this, but it's because of you we have to do this.
Right.
That this continuing education has to, like, continue to take place. And, like, the way that Canada's overseen, it's not by the SEC, it's by IROC, right? So, like, a lot of these guys that are part of IROC, the self-regulatory organization, right? So, like, everything's overseen by all the constituents that make it up. They've made all the rules. So you've got to go through all this continuing education, yada, yada, yada. And you see why, because a lot of your contemporaries just, like, can't really hang. Like, you're just like, you're not. Yeah, that's why, because people are inept. They don't work that hard. How much do we make of this podcast?
None.
You make a nickel?
Maybe,
make one nickel? Yeah. Okay, so this takes us how many hours a week? I do this for fun.
Yeah, exactly.
We do this for fun because we love the stock market. Because this has been a part of me since I've been 15 years old.
Yeah,
this is just what I do, right? Yeah. So, but a lot of these guys were doing it for a job. They were doing it as their racket. It's just like a lot of insurance salesmen or mutual fund salesmen or guys who sell cars or whatever it happens to be. So you could see why that. But I was in and out of Toronto, just ridiculous amount all the time, and it just was. There was nothing. I just didn't see the real estate. I didn't see the justification. And I mean, the real estate was high then. This was years ago now, right? I'm 35, but this was in the 60s, right? When I was only in my 20s.
That's right.
This was many years ago. I never seen it. I never seen the cachet. No. I didn't see what the point was, other than there was just a lot of people. There just happened to be a lot of people in that area. Because I've heard, like, Ottawa, beautiful architecture. Victoria, beautiful. Montreal, Montreal, apparently beautiful.
That's what I heard.
Toronto, I didn't see it. Like, major metropolitan area. Sure, the New York of Canada. But like, it's like Calgary. Like, I don't see the draw.
Neither.
There's just no draw for me unless you had a job there that was, like, relevant.
I guess so. Yeah.
Are we done crapping on Toronto now?
I think so.
Yeah, sorry, I actually like Toronto. Like, I know I'm from Edmonton or Vancouver, wherever you want to consider it, but I'm like, I got no problem with your sports teams.
Right.
Like, I'm not a Toronto hater.
No.
The city just looked like a big brick. Yeah.
Like any other city.
Just a city, man.
Yeah.
It didn't wow me. And I was in there a lot. And I wanted to be wowed.
Right.
At first, I was endeared with the idea of going to Toronto so much.
Yeah.
Thinking, like, this could be cool. And then I was like, this is whatever.
But there was nothing there.
Yeah.
It was just like, just another city.
There was,
some buildings.
Yeah, and I had some guys that were
roads.
from the area that took me around, and every time, right? Like, there was a lot of people in there. So you had a lot of people from in and around Toronto that knew the lay of the land. And
right, the hot spots.
And it was, a lot of financial advisors. So, I mean, you got guys that are, everybody's doing all right. It's not a tough time to go out and find something to do.
Yeah.
So it's a lack of there wasn't really much to do. It was just Edmonton XL. It was just a bigger city, right? I don't know. Yeah, done crapping on Toronto. Love Toronto. Everybody from Toronto, shout out. Seriously, we love you guys. Man, just one of those things. I live in the same thing. Just a big brick city.
All right.
Anyways, go ahead, move on.
Let's move on to some headlines.
Sorry, Toronto. I love you guys, man.
Speaking about tariffs, looks like Trump might hit China with some steep tariffs.
So again, we go back to the national debt.
We do.
I was going to revisit that. China, so they hold all that national debt. We talk about this trade war. We don't hear China saying they're going to call in any kind of debt, right? So
no.
It is what it is. So $60 billion in potential U.S. tariffs imposed on China in relation to information technology, telecommunications, consumer electronics products. This is basically in response to some perceived from the United States or alleged intellectual property theft by a bunch of Chinese companies that basically don't have the laws that enforced on them in China because the laws for intellectual property are completely different. And it's not U.S. law over there, so you can't just go and enforce it, even though it's U.S. companies that are apparently being infringed upon. Hence the reason a lot of Chinese products in some of these other areas aren't even allowed. It's not only is there security concern, but there's a lot of litigation concern, I guess you'd call it. There's all this kind of stuff. So Chinese tariffs, $60 billion potentially. They're going to go back and forth, and they're going to figure this out to some extent because China said they don't want, they don't want any kind of trade war. These are the two biggest economies in the world.
Yeah,
they're going to figure this stuff out. There's going to be Trump's huffing and puffing, but you don't want to huff and puff in China's direction too much. I don't think so. Yeah, they play pretty good on the world stage. Like, you can't expect every country to just do things exactly the same way you do.
Yeah, you can.
People are going to be different. Like, people from around the world are different people. They act differently. Things are different. Their countries have different ideals and landscapes and just the way people think and the hive mind,
Right.
Have you ever, what I'm talking about? Like, people in a group think a certain way.
Yeah, they do.
There's hive mind out there, right? So that happens here, and the same thing is it's just not that they're wrong. It's just that they think different. You're not going to start to slap the hand of people that are... China's on our side. China's a good capitalist country that's really emerging as a front runner in the world. Like, let's not. They're smart enough, just like with Canada, where they're gonna let Canada know who's boss. The U.S. is boss.
Yeah.
U.S. is gonna flex on China, but they're not gonna flex on China. They're not gonna flex on them too much. There's still too good of a working agreement between Canada. They need each other too much. And all the companies inside both countries need each other too much. And China is ultimately, who else is the front runner for the number 2 country with us? It's not the UK anymore. Maybe industrial-wise, it could be Germany or Japan. Maybe, Russia's huge, but they're not on that level. Brazil, India, they never came out of the gates like they were supposed to back in the BRIC days. Russia either, right? Like, China definitely is the... for sure. China's the BRIC country that emerged as the real powerhouse. And China, I think... Germany doesn't have the size. I think China's the one you got to keep happy.
I think so.
That's the relationship you need to foster. That's the big one. Like, more so than India, more so than any of those other major population center countries. China, you've got to foster the most. They came out... What was the White House committee came out and said, speaking of relationships you got to foster, there was no connection between the Trump administration, and political, and Russia. With the actual presidential election. There was absolutely no connection whatsoever, they said. So there's that. I don't see that report. I saw that was reported, and then I just saw more about a porn star.
Yeah, exactly. It was just a little snippet, and then
they just went back to the other topic now. They're just like, well, we don't want to admit that's nothing, and that this guy we just want to whatever we can do to kick him.
Now it's bad mouthing him, right?
Yeah, bad mouthing about something else.
Like,
now that this doesn't hold weight anymore, but that did also come out. But I would like to think that the China tariffs thing, there's going to be obviously some, because they're going to work something. They're going to work something. They're not going to be any trade wars. Like, and people say the market was affected by this the most this past week, but I think this is going to be one of the things where this ends up ultimately getting worked out by two countries that know that each other's in each other's best interest.
Yes.
Right?
Yeah.
The benefit of each other is some of the biggest interests we have in the entire world. U.S. and China will be just fine.
I think so.
Happy. They'll go
hands into the sunset.
Oh, I'm telling you, bro. That's going to work out just fine.
Oh, yeah. I'm sure they will. Well, it is official. It's kind of sad that Toys R Us has finally started shutting their stores down, huh?
I guess we were prepared. We talked about this. $3.1 billion in bankruptcy protection they were given in September, basically to assure a bunch of companies, manufacturers, that they were going to get theirs, suppliers that they were going to get theirs through the holiday season. Even they're not getting theirs apparently, as that $3.1 billion disappeared. Mm-hmm. They need $15-16 million right now to pay a bill that they don't have the money for. They said it's over. It's over. They're closing stores. It's over. Canada up here, they're looking for a buyer still, Toys R Us Canada, to save the 82 stores that are across Canada. Yeah. It's over.
It is, yeah.
They never were competitive with pricing. It was just the stock didn't turn over fast enough. Yeah. It was a great...
They're definitely on life support. Not even life support.
It's over. It's over. It was great when we were kids.
The 80s and 90s were definitely king for Toys R Us.
But it was like that with Blockbuster.
Definitely,
It was like other... it's over sometimes.
It is.
I was looking at a thing about, Canadian retail and dying up here. Sears died obviously late last year.
Yeah, yeah.
Or was that early this year?
I think it was early this year.
January.
Yes,
yeah.
Yeah.
Zellers in 2013.
Yeah, that's right.
Target in 2015. So Future Shop in 2015.
That's right.
And now Toys R Us here in 2018. Big retail, big box retail. That's what that is basically. Big department stores. Mm-hmm. Yeah, dying. It's a dying breed.
It is. Yeah. So, Times are changing, right?
Yeah. Toys R Us had their heyday.
Oh,
I got a lot of memories.
Me too. I still was a Toys R Us kid.
My kids are 4. I got twins. My kids are 4. I mean, I got twins, but these guys out here, the people from Toronto who got the burning sticks now for me. The riot out there that's gonna stomp me the next time I come to Toronto. I love you, Toronto. I got twins, so don't hurt them at least. And so I've had the chance to at least go to Toys R Us with them, right? And have a little bit of that
experience,
because it's not there. There's no toy stores anymore.
No, the only toy stores you have are like the Walmart, right?
Yeah,
or something like that. Or you find one of those like niche like collectible stores.
Yeah, like we used to own.
We used to own one of
those. We've done a lot. We've covered a lot of ground in this life.
Yes,
we used to own a toy store. For our longtime listeners, they know exactly what we're talking about. But Toys R Us gone. Yeah, no KB toys. I don't think in the States anymore, right?
No
toys no toys and wheels up here.
No.
Toy stores just gone.
They're gone. Yeah.
It was a thing of the past. It was before video games. I mean, video games took that market share.
Oh, definitely.
That's where the attention is. Yeah, toys were awesome.
Toys are awesome. Yeah.
Toys were awesome.
Use your imagination. Yeah. Could take you anywhere.
My kids love Lego, man. Yeah. The Lego store's still around.
Oh, Lego will be around till the end of time.
Yeah, Lego.
That's a guarantee.
That's a given. I'd buy that company for sure.
For sure, absolutely. Right. Yeah. There's another thing I want to talk about. Is there any clarity on what Berkshire Hathaway are looking to invest in?
Yeah. So we talked a couple weeks ago. They've got a lot of money, right? So they reported earnings a couple weeks ago. Buffett kind of came out and had a bit of dialogue about what he might be thinking about doing. This week, there's rumors that Berkshire could be putting some of that money to work. Apparently, he wants to own a whole airline. He doesn't want to own a piece of it. He wants to own a whole one. Apparently, rumors, Delta or Southwest. Rumors.
Rumors,
but they do have, what, how much? 160 billion?
116 billion.
16. Yeah. Sitting on a few billion.
Oh, a few.
They're liquid. They're liquid right now.
For sure.
They could make a move, a big move. And they already own a lot of different companies, could make another big move. This could be, they own Apple and Coca-Cola.
That's right, yeah.
Kraft, Heinz, and all sorts of... Berkshire holding on to a lot of stuff.
Oh, some of the big stuff.
Some of the big stuff. Some of the real big stuff. And this could be another move into getting into some stuff. I don't know. Never been a huge stock fan of the airlines.
Right.
Very tight margins. We discussed tight. This, didn't we? That Buffett really does own a lot of companies outside of Apple, I would imagine. I don't know what Apple's margins look like, to be honest with you, off the top of my head. But a lot of companies he owns have very tight margins.
They do,
Yeah, we've noticed that. He actually does really well and thrives with that. You would think someone would be a lot more keen to invest in companies that have a lot more forgiving margins, where if you start losing a little market share, it's okay. Not that the companies that he owns are losing any type of market share at any point in time.
No.
But the margins just aren't forgiving. They're not broad. Right. They don't give you this nice range. You're not making just ridiculous cash off every item sold.
He must know something.
It's because he invests in companies where he likes the people running them. He really gets down to the way that company operates, and
I'm sure he does his research.
Maybe an airline stock may not be for me as an investor, but an airline company as an investor in companies that he actually has the ability to have some say on. And I would imagine if they owned it all, there would be some serious Berkshire Hathaway input.
Oh, for sure.
That an airline with small margins might still be a company that would be a perfect type of a fit for Berkshire Hathaway.
For sure.
So when I read that report, I thought, you know what? That does make quite a bit of sense. I mean, it's tough to get inside the mind of Buffett and Munger and everybody else over there. A lot of the guys that are going to be taking over that are in place already over at Berkshire, as obviously there's going to be an exodus quite quickly. Munger well into his 90s. We will see. We will see. Delta or Southwest potentially on the purchase radar of Berkshire Hathaway.
They definitely are, yeah. Why don't you give me the rest of the headlines that happened
The rest.
The rest.
Coke and the U.S. State Department, they don't go together. Don't do Coke at the U.S. State Department. No, this is Coca-Cola.
Oh, okay.
These aren't, different straw. They're using blockchain digital ledger technology to fight forced labor worldwide. The U.S. State Department, Coca-Cola, Berkshire Hathaway Company, and a bunch of other companies, 3 other companies, unnamed at this point, are teaming up to stop forced labor in their plants and in their manufacturing facilities worldwide. Because apparently there's over 25 million people worldwide that are trapped, I guess you'd call it, into forced labor.
Wow.
So this digital ledger technology through the blockchain obviously is going to allow, I guess, people that they're going to have to, punch in and punch out. And it's going to show that these people are actually people that are being paid, that are working the right amount of hours for whatever their labor system says is fair play. So there you go. Coca-Cola, the first one on board, and the first time the U.S. State Department or any U.S. government department has used blockchain technology. Right. So there you go. We talked earlier about cryptocurrency and Bitcoin doing a whole lot of nothing.
And how blockchain
is soaring, finding its own relevance. Like, look at this. This isn't even something that's going to end up making money.
No.
But this is just going to keep people honest and allow the global economy to continue to thrive, as everybody should get fair play.
Oh, I believe so, yeah. I couldn't imagine living in that place where you're forced labor.
Yeah. Forced to taste test Coca-Cola, maybe.
Oh, that wouldn't be too bad, right?
Like, oh no, now it's Wednesday, it's forced vanilla Coke taste testing day. Forced cherry Coke testing Friday. Yeah. These days are so long.
Forced testing Twinkies.
Why
could it be something like that?
Yeah,
right?
Well, I'd get diabetes so easy. I'd blow up.
That'd be so good.
It would, but I'd blow up. And then, hopefully the other half of the forced labor is a lot
cut off a foot or something.
A lot of road work and lifting steel.
Oh, I imagine that's what the forced labor is.
So that I don't, because I would relish the Twinkie eating forced labor.
Oh, for sure.
But my thighs wouldn't.
Yeah. I'd rather work at McDonald's forced labor for Big Macs.
No,
that would be not too bad.
Lloyd Blankfein from, obviously, Goldman Sachs, the CEO we talked about last week, stepping down. It's over. That's the end. Came in around the same time JP Morgan Chase CEO Jamie Dimon came in.
He's leaving this year, isn't he?
Blankfein leaving. Jamie Dimon just staying on 2021, I believe. Blankfein, though, leaving from Goldman, that's the end. It's the end of an era. He's got to go. You know, like we heard, maybe the exit by the end of 2018 already. Yeah. One of the greatest banking CEOs, easy of this generation, through the financial crisis, led Goldman, the most prestigious investment firm, through troubled waters. They didn't even need the $100 billion in the bailout.
That's right.
Took it to be a part of the group. Blankfein came out this week and said that's a Wall Street Journal report, but that didn't come out of my mouth, bro. I ain't retiring. I don't know what you heard.
Right. Yeah.
So Blankfein came out early in the week and said, "What?
What?"
Like he compared it to Huck Finn listening to his own eulogy.
That's
he was saying like, I don't. Doesn't compute with me.
Right.
So last week we had President and co-COO Harvey Schwartz and co-COO David Solomon that are co-COOs, the guys at the tip top where Blankfein's, you know, like those are the guys that spell him off. Those are his boys. Those were going to be the guys that were the successors. Who was going to be the successor was the conversation.
That's right.
Who? Solomon? Schwartz? Who's the successor to Blankfein? Thunderdome?
Thunderdome.
Wow.
That's the only way
that got heavy. These guys are worth millions. I don't think they're going to Thunderdome it. Somebody's going to retire. You know who it is? It's Schwartz. He's retiring. So the Wall Street Journal had the wrong guy. They were retiring Blankfein, the CEO.
Wrong guy, wrong position.
And what ends up happening is going to make David Solomon now the president and sole COO of Goldman Sachs.
That's right.
Making him easy, the number 2 behind Blankfein. Because Schwartz is going to retire next month. Yeah. So, I mean, Solomon's going to have to be eaten by a bear before then. And that's going to basically quell any successor talks, as David Solomon is easily going to be the successor to Lloyd Blankfein, who is not retiring. But Harvey Schwartz is retiring. So, so much for that co-COO position. That is now going to be David Solomon's just by himself.
Yeah.
And in a time when, you know, Goldman Sachs is doing fantastic. It's not a bad title to take on.
No, not at all.
Tesla engineers have come out in the news, and basically there's been some leaks saying that the Model 3 manufacturing has been full of flaws, drastically slowing a bunch of production, that a bunch of stuff is having to be retooled. Like, it's not working out. A lot of errors. And that's just not a good sign, as we hear that production, we've heard numbers promised from Elon Musk. Things are supposed to ramp up. We're supposed to see a continued ramping up of Model 3 production. And what it sounds like is a car that's already in production and having deliveries is still having serious tooling issues. That's not good. That would make me quite concerned as an investor, as a lender, as an owner of a Tesla.
Oh, for sure, definitely.
I would be questioning a lot of things, so that's not good news coming out of Tesla. Caterpillar retail machine sales. Wow, that's a mouthful. Up 33% year over year in the 3 months ending in February. Caterpillar having another phenomenal year. Growth in China obviously contributing to that pretty considerably. But growth everywhere continues to contribute. Obviously, in the United States, with the idea that infrastructure building is going to get a nice boost from the federal government in the tune of billions and billions of dollars, as long as things get expedited to a 2-year filing process and get things on the move. You could see companies like Caterpillar pushing those retail machine sales mouthful all over again. Those numbers are going to continue to go up and up and up. GE, they did not pay bonuses to their top executives.
That's right.
Flannery, all those guys. None of those guys. They got rid of the planes, remember, last year? No more planes for top executives. They didn't pay bonuses in 2017.
What is it, 125 years?
125 years. This is the first time. So they lowered the dividend last year, 24 cents to 12.
Yeah.
They took away the planes. Top executives, no bonuses. First time in 125 years.
Yeah.
They're trying to turn this thing around. They're not... You can't tell me that GE isn't making all the sacrifices that they can to try to turn that ship around. I know they've got some real streamlining to do inside that company. But those guys that are in that company right now, man, if you're a shareholder at GE, you got to be looking at that and thinking like, these guys they're not kidding. They're taking their own livelihood in spite of the fact that you're going to get bad media. They're going to get bad media coverage anyways, just because GE's in the tank.
That's right,
So like they could have just took their bonuses and just chalked it up to, keep hating, whatever.
Exactly,
But instead, even though they're going to get bad media coverage because GE's in the tank, they still said like, hey, we mean this. We really mean it. We're trying to fix this. And by cutting that dividend, would they free up $4 billion?
Yeah.
Right? Yeah. So, I mean,
billion,
it's a significant amount of money. GE still trying to figure it out. Not paying.
Well, I hope they do. I hope really do.
I'm telling you, man. So GE and Boeing have, GE's got an engine, right? So this is the GE9X. It's going to be the biggest jet engine of all time. It's high powered.
Yeah.
As GE makes engines, Pratt & Whitney makes engines. There's a lot of engines being made over at Boeing. But GE's 9X will power the Boeing 7779 and the 7778 that are going to be entering service in 2020 and 2022 respectively. They've started trial flights on this GE9X here just this week as the biggest jet engine ever made by General Electric just entered service in some Boeing planes that are going to be available here in the next, 2 years and 4 years respectively.
That's right, yeah.
This is GE, for all the hardship, is still on the front lines of a lot of technology. People need to remember that if that company can get things in order, it's not like they've fallen out of favor with other major companies. They just have fallen out of favor.
Just behind.
They just can't get their accounting in order.
No.
They have too many divisions doing too many things. They just aren't a streamlined enough company. That's their biggest issue. Boeing, speaking of things getting off the ground for the first time, Boeing 737 MAX 7 made its maiden flight successfully. Certification and delivery are expected in 2019. The 737 MAX 7s are going to have 172 passengers and 3,850 nautical mile range. That's going to be the longest of all the MAXs. Like I said, those are expected to go into service in 2019, as that's the time delivery and certification should get off the board. GE's board was also kind of hinting at the fact that they might be upping some production on a couple of planes as well. I don't know how you can up production with a backlog of whatever it is, $40 billion or something, right? Like, I don't know how, if you don't have room or time or people, that you don't have production at maximum output, right?
Yeah.
Like, the orders come in faster than the planes get built.
Yeah. So how are you supposed to up production if you already can't keep up with
normal standards? I would imagine they're
right?
already at maximum production, but apparently they're hinting at potentially upping production even more than that. Walmart continuing to combat fighting basically Whole Foods and Amazon.
Right, that's right.
They're going to have to figure out how to do it. Expands grocery delivery from the six cities that it's in right now to over 100 by the end of 2018 as they are expediting this process something significally, because Amazon and Whole Foods, they're going to have market share here. We got no Whole Foods here.
We don't.
Is Walmart going to do it in Edmonton is the question, and in Calgary and everywhere else where Whole Foods doesn't have a foothold and Amazon isn't? Because this should be the marketplaces they try to get to first. Because what's Amazon going to get a hold of up here in Canada in the next little bit that's going to give them that kind of market share in the grocery delivery business? None.
Nothing. No,
so I don't know why Walmart wouldn't be focused on countries that aren't already saturated.
Right,
do it there too.
Yeah.
But don't expect to really be able to. You're not going to just all of a sudden dominate that marketplace. You may keep up, but you probably won't even keep up.
But if you start up here, you definitely would dominate.
You would dominate up here, right?
Sure.
So just, as an aside, Walmart, listen to us. You run a multi-billion-dollar company. And we're a couple of clowns with a microphone, but we have access to the internet and we know the answers. So I would listen to us.
Definitely.
CVS and Aetna, they're getting together. There's a merger. What was it? $64 billion, something like that. Really,
beautiful union.
Yeah. The shareholders really like it. Did you hear that?
They do, yes.
They did an exclusive vote just for shareholders to express their sentiment on how they felt about the union between CVS and Aetna. How do you think the shareholders felt?
I don't know. Like a dream come true kind of thing?
98% and 99% approval.
Wow.
So shareholders on both sides, very, very much in favor of these two companies getting together, expanding the CVS reach into all sorts of different insurance and I mean, it really moves CVS into a spot where
kind of moving on to a whole new level.
Right? when you talk about Walgreens purchasing a good amount of Rite Aid and continuing what Walgreens does on that retail level, CVS went the whole other direction and moved into a different market space. And if this goes through all the regulatory stuff, obviously shareholders want it to go through. I think it's going to really hedge CVS way more than Walgreens in case Amazon comes a knocking. And they might.
That's just...
It's a matter of time.
The clock's a tick.
The clock is ticking,
Definitely.
my friend. Apple came out at SWSX, at the conference at SWSX. The services chief, Eddie Q, said that Apple wants a studio with all their money that they have, which they have a lot of money, much like Berkshire. They want a studio as opposed to a streaming company, because there was a lot of rumors that Apple might be interested in Netflix.
Right.
So because Apple already has streaming, obviously, right? So we know that. But now Apple, we know they're spending a lot of money on original content, apparently. And I mean, this is obviously services chief. This isn't a guy making a final call.
Yeah.
But you don't know that this didn't come out of a boardroom meeting that he was involved in and didn't just maybe spill a little bit of the beans, that Apple thinks that maybe if they get a well-refined studio, somebody that's a well-oiled machine already, that it won't help Apple expand their reach into the original programming demographic a lot stronger. And that might be exactly what they're looking for. So that's a bit of news as we talk about what could Amazon buy, what could Berkshire buy, what could Apple buy. So in a year last year where we talk Broadcom, Qualcomm, where we talk AT&T, Time Warner, when we did talk SoftBank and Deutsche Telekom, but it ended up being Sprint and T-Mobile. We talk about all these other mergers at Aetna and CVS.
Yep.
I mean, honestly, this year, when we start talking, it's probably Amazon's turn again, because that Whole Foods news was old. Amazon, Berkshire, Apple, there are a couple big companies that sound like they're right around thinking about putting that capital they're sitting on to work.
Oh, yeah,
and they're going to bring, there's going to be something big that's going to go on, I would imagine. One of those three for sure, if not a couple of them, in 2018 are going to make some strikingly large news with an acquisition. It ain't going to be a merger.
No.
Those three companies.
It's going to be like, I'm buying you.
It's going to be, we're all in, you're coming with us, right?
Yeah, exactly.
Netflix, in the process of making a 60 Minutes or 2020 style news show. Really? I like those shows.
Me too. Yeah,
right? I like those kind of shows. They got the little 15-minute exposés on different things, and occasionally you have a whole 60-minute show dedicated to one topic. But a lot of times, Hugh Downs does one thing, Barbara Walters does something else, or whoever, Morley Safer, whoever it ends up being on whatever version of the show it is. Right?
2020.
I'm pretty sure all the guys that I just mentioned are well retired.
Oh
dead. But Barbara Walters still alive. Yeah. Hugh Downs and Morley Safer maybe not doing so well.
Probably not.
But Netflix trying to create a new show. They have a few shows. Did you know
that? Yes, I did know that.
Do you watch Netflix?
No.
I was on it yesterday, and it was a mess. I went onto the horror section.
Oh, yeah?
And they don't have any classic horror whatsoever. You know what they had was they had a whole lot of new nonsense. Horror must be easy to make. A lot of Netflix original, no old. There's three Friday the 13th.
Right.
It just wasn't enough.
No.
Yeah.
No, that's no.
But Netflix apparently has a lot of original programming. That's what I've heard. Next year in 2018, they're going to spend $8 billion. $8 billion.
Billion.
That's a lot of money, bro.
That is.
On original content.
Yeah.
700 shows and films.
Oh, really?
700. I don't know if that's like taking into account like a TV show has 13 episodes and all the different TV shows that they have, but holy, that's 700 films and shows. That's going to rise to $12.2 billion by 2020 when they have, 10,000 shows and films.
Right,
or one massive show. One show that just never ends. That's just got a recurring cast of gold-plated Elvis. I don't know. Well, how can they justify spending that much money?
Yes.
It's going to take the reincarnation of Elvis
for sure.
and then gold-plating him and having him work 24/7, 365 on a live stream, singing Heartbreak Hotel or something. To justify $12.2 billion in shows and films.
Quite a bit.
What kind of show and film is that?
Yeah, I want to know.
Better be interesting.
Yeah.
They spent $8 billion this year. I haven't watched one of their shows or films yet.
I want to see the new Nightmare on Elm Street.
When we start talking about demographics for Netflix, we have to remember there are outliers like me.
Yes.
That literally don't watch anything. I know nothing of media.
Yeah.
Like when we come on here and talk about Time Warner and Comcast and all this stuff, I know what they are. Yes. I know what sports are. Yeah. I know how to play sports. But do I watch things? No. I know nothing. No. So Netflix... I'm still out there. You could still hook me. I'm still an action.
Yeah, exactly.
I'm a human that isn't in the demographic yet.
Yeah, to be hooked.
Yeah, I don't know what you'd have to do. Pro wrestling.
Oh, if they had, I don't know. I think.
Yeah, I don't know why Netflix doesn't have pro wrestling yet. I think with the amount of money they could get a pro wrestling, especially like WCW or. Like TNA used to do, where they do like where TNA still, or no, they don't do it anymore. You studio wrestling, like out of like Universal Studios, where a live crowd cycled through, and you do it more for the actual, selling the actual show. Netflix could have an original show
for sure.
Wrestling seems like it's good TV.
It is.
It's definitely. It's like magic. Not everybody's into it, but the people that are into it pretty good.
Die hard.
Yeah, I'm a dork. Yeah, that's what we sidetracked from. We sidetracked from Netflix spending big bank to me being a dork.
We did.
I'm good looking for my age, bro.
For sure.
Calm down. AT&T and Time Warner, the trial begins Monday.
Monday, huh?
Monday. With the Justice Department, they are trying to get this done. AT&T and Time Warner merger. This is a big one. This is a big one.
Tomorrow.
We're looking at these, like, the end of the year here. These sectors are going to be merged. The telecom and the media sectors are going to be merged on the S&P. Like, this is a natural progression. Yeah. Neither of these two have enough market share on either of the two things that they're crossing over on that I think it's going to be, that I think it should be hung up any more than the Justice Department looking into this a little further and then moving on. If they got to sell one or two assets, they might. We know AT&T is not too keen on selling a few of the assets out of Time Warner, but it's going to end up probably having happen where you happen to sell a couple of them. But we'll get it done. AT&T and Time Warner, I would imagine the Justice Department, after looking at this, probably says it's allowed to go through. As we see other companies continue to get into stuff. Comcast, NBC streaming service is going to start this year. Comcast, obviously the parent company of NBC. And Comcast is still in the process of trying to buy the rest of Sky out from under Fox, which is Disney. Confusing mess. Comcast making a play. We thought they were going to make a play for Fox.
We did.
But it turned out they made a play for an asset that Fox tried to buy in December 2016 in Sky over in Europe.
That's right.
And then apparently the ink wasn't dry on that. How ink can't be dry on a deal that's 18 months old is beyond me.
That is right.
But it's not. So Comcast made a play for that. So because Fox is now Disney's in on that. And so NBC's starting a streaming service this year. Comcast.
Okay.
Yeah, the telecom and media companies out there doing lots. Sprint, $3.9 billion in spectrum-backed note offering, trying to raise a little money, backing it with some spectrum. So that's obviously the bandwidth out there, the signal.
Yes.
That's what that is, and that's in the we're in the crux of the U.S. government freeing up some spectrum quickly, trying to get this done in an expedient way.
That's right. Yeah.
So that AT&T and Verizon and Sprint and T-Mobile can really get the 5G infrastructure up and going around the United States. We've heard, obviously, Verizon and AT&T have the intent of 2018 being the launching year in a lot of cities, where T-Mobile and Sprint are talking about 2019, obviously.
Yeah.
But Sprint looking to raise some money, $3.9 billion in spectrum-backed note offerings. Microsoft has a bounty out there.
A bounty?
A $250,000 bounty on the head of any cloud bugs.
Oh, really?
Yeah. See, Microsoft's cloud service, Azure, is getting quite popular. So what Microsoft announced this week was that for basically anybody who can find them, hackers or anybody else, find any back doors, any problems, you don't want anybody sneaking in your back door.
No.
No. Shut that down.
Yeah.
So if you can find it, There's $250,000 from Microsoft in it for you. You know why?
Oh, wow.
Because Microsoft's Azure cloud platform has moved into the cloud gaming sphere, where people can host and hold gaming tournaments and stuff through the cloud gaming. And Ubisoft, maker of Rainbow Six and all that, are actually one of the clients of one of the first clients for their gaming division, the cloud gaming division. Okay. And obviously they have Xbox, so they're going to attract a lot of...
Oh, for sure.
And as we see the cloud-based platform in Azure continue to grow in size over at Microsoft, they've thought they'd put it out to the community. If you can find any kind of issues, which is smart, I think. We'll give you $250,000.
Yeah.
$250,000 if you can find problems in the infrastructure.
Yeah.
Pretty good and smart.
Per bug, huh?
Smart, right? Really smart.
Really
so
smart.
Microsoft's out there trying to...
There's probably 1 million people right now on this case. Easily 1 million.
Right?
People. Easily.
You're not paying people.
No.
These people are looking for problems in your infrastructure. You're only going to pay one of them. You're going to pay one of them, the salary of 3 years? But the actual issue, if you found an exploit that was so significant it could bring down the gaming or something, you could have something that cost millions.
Maybe you might even get a job offer off of something.
But you could have something that cost Microsoft millions in losses that could be quelled with a $250,000 investment, where, like you said, thousands of programmers are looking at this right now for free.
Easily.
For free.
Yeah.
Facebook and Google. So that's Alphabet /YouTube / that's where we are. Shout out to YouTube. What's going on, YouTube? Shout out. We love you guys. We know you're advertiser. Getting a little strict. You took back the monetizing and all that. And
stole it from us.
Yeah, you stole it. We're coming for it back. I don't know if you know that already, but I'm guaranteeing it for you. Facebook and Google, Alphabet, have decided to ban cryptocurrency and all crypto-related advertising. That includes like wallets or trading platforms or any of that stuff, starting in June. They said it's not their place to this was Facebook coming out. The Google had already come out and said they were doing this. Facebook now coming out and saying they're doing it, both starting in June. Facebook came out, the representative, and said they're not into speculating the future, but they understand that these cryptocurrencies have affected people enough in too vast of a degree, let's say.
Right. Yeah.
And they don't want to be a partner to it. It could be too detrimental to people, and they don't want people to think that they were co-signing it. Again, not like we would assume you were.
No.
But we do, I guess, understand.
I see where they're coming from, though,
in this environment where people are they're quick to point blame at everyone but themselves. Facebook convinced me to...
Oh, exactly.
Yeah, that's why I was invested in Bitcoin.
On Facebook.
I saw it on Facebook. Facebook tells me to do everything. Facebook says jump off a bridge, and I do it.
I do it.
CEO of Intel, Brian Krzanich, backs out of these Broadcom rumors, saying, the what now?
The what now?
The what now? You say we're buying Broadcom or we're buying Qualcomm, and Broadcom tries to buy Qualcomm. Remember this last week?
Yes, we did, yeah.
So do you remember? In case you don't remember, Qualcomm wants to buy NXP Semiconductors. NXP Semiconductors, we're trying to close on that, but unfortunately we haven't come to a close yet. Broadcom, though, wants to buy Qualcomm, wants Qualcomm to close on NXP Semiconductors, get it done for the price that it is now, or basically, or get off the pot.
Right.
Qualcomm doesn't want to be purchased by Broadcom, but we've heard shareholders over at Qualcomm do want to be purchased by Broadcom. Broadcom making the right move. Obviously, Qualcomm having licensing issues, all sorts of stuff. Semiconductor industry's up 36% overall last year. Qualcomm, obviously, the only one that was flat. Intel, another major semiconductor player in the industry, one of the biggest, wanted to last week, from what we heard in rumors, wanted to buy Qualcomm if Broadcom was able to buy Qualcomm. So if the Qualcomm deal would have went through, Intel would have upped the actual offer price to try to usurp Broadcom for buying it. But if not, if the deal would have fell through and NXP Semiconductors would have been bought by Qualcomm and Broadcom would have walked away, then Intel would have tried to buy Broadcom. CEO Brian Krzanich comes out this week and says, the what? The what now? The what? Maybe he listened to the podcast.
Maybe he did.
And was like, what?
What's going on?
What do you want me to buy again?
Yeah.
So Intel says recently they bought Altera. They also bought Mobileye. They spent a lot of money on that. They're very, very much in-house, focused on the integration of those two companies into Intel. Brian Krzanich, the what now? I'm sorry, you won't have to hear that long diatribe about Broadcom, Qualcomm again, at least not with you involved in it. But other semiconductor companies, that like the fast talk, Texas Instrument or Micron. If you want to get in on this,
now's your time.
Now's your time.
Yeah.
Apparently, Intel doesn't want to buy Qualcomm or Broadcom.
Don't let this opportunity pass you guys by.
This is because the Broadcom-Qualcomm saga is going to go on indefinitely.
Oh, it is.
This is the Star Wars saga.
Oh, for
this
sure.
is never going to end.
No, never.
So other companies might as well get in and at least get a little bit of shine.
Just be in on the story.
Get in on a little
point.
shine.
Yeah,
Get in on it, right? Like you might as well get a little media coverage.
Exactly.
So Intel's Brian Krzanich, the what now? We're not buying nothing.
Yeah, exactly.
Yeah.
Well, that wraps up headlines.
It does.
Yes.
How are we doing for time? It is almost 9.
It is. Yeah.
Almost 9 o'clock. We are late. Running late, my friend. Today, people be watching this, listening to it. I always say watching it. We do videos, yeah. I always wonder what they're watching. They're going to be hearing this early Monday.
They will.
We'll just continue to ramble and carry this on.
It's on.
I don't even care.
No.
Yeah, earnings are short. Let's get to it.
Very short, yes. Let's get on to some earnings. So I will let you...
Williams Sonoma, so home product provider, also owns a pottery barn. They make all sorts of appliances and tables and chairs, all sorts of good stuff. Williams Sonoma, $1.68, beat the street by 7 cents. $1.68 billion in revenue, beat the street by $30 million, up 6.3% year over year. $55.60 up on earnings. Comp store sales at the pottery barn up 4%. Comp sales for the Williams Sonoma branded products up 4%. E-commerce sales up 8.4%, and they account for 52% of all sales at Williams Sonoma. Dollar General, $1.48 in earnings. That is in line with the street. $6.13 billion in revenue. That is a lot of dollar store sales. That missed by $70 million from what the street had estimated, but that's up 2% only. 2% revenue growth year over year. We know that they've had positive results from consumables as they added in a bunch of consumable shelves, stuff that ice cream sandwiches and stuff they want to get you to impulse buy as you're walking out of the dollar store, pop, that kind of stuff. So Dollar General doing well with that, even though they had some of their home brands not doing near as well as they used to do. Dollar General, $95.43, up on the earnings. Same store sales continue to grow at Dollar General. Broadcom, one of the companies in the story that we covered.
That's right.
$5.12 in earnings, beat the street by 8 cents, $5.33 billion in sales. Broadcom doing really well and doing a really good job of transitioning into the stuff that they haven't been in before, weren't in near enough compared to the stuff they were in. They beat that revenue number by $10 million from the street and up 28.4% year over year. Doing really well. $254.87 down on the earnings, but wired infrastructure, which was Broadcom's main, that was the ham and egger for Broadcom.
Yeah.
Down 10%, as wireless communications up 88% as they're moving into the right marketplaces. Enterprise storage up 40%, industrial and other up 45%. Broadcom only down because they're up so much.
Right.
That earnings call would have had to have just been amazing for people to continue to push it higher, because Broadcom has just been up so much. It was up ridiculous last year, right? Adobe Systems, $1.55, beat the street by 11 cents. $2.08 billion, beat by 30 million, up 23.8% year over year. $225.55 up on earnings. Subscriptions up 30%. Adobe obviously does Photoshop and stuff. So I don't look so old.
Editing programs.
I don't want to look so old.
No
Photoshop stuff from
now you have to.
Yeah.
After that comment.
Photoshop my age out of things.
Exactly.
Yeah.
Age.
Is there an age filter?
Oh, for sure. They're definitely
would hope so. Adobe would know. I'll call their customer support. Products down 6%. Services and support down 0.6%. Cash and equivalents of $2.67 billion with long-term debt only of $1.87 billion. Adobe Systems doing really well. I don't know how dominant a lot of I know Photoshop, all that kind of stuff, Illustrator, those are the big market share. They covered the gamut. I mean, they were huge compared to everybody else. I don't know if that market share has started to slip at all in recent years. I know at one point in time we even had an Adobe subscription.
We did.
Adobe Premium stuff, right?
I know a lot of movies use Adobe for their editing and their
Premiere Pro.
And stuff like that.
Yeah, Adobe's got a lot of good stuff. I just don't know how well they keep up in comparison to years gone past when I knew for sure they were number one. I don't know. I haven't looked into how much that margin is actually has actually slipped for them, if at all. Maybe
If at all,
maybe
yeah.
they've gained market share.
Maybe they're still dominant.
Yeah, maybe
right?
they've gained market share. Who knows? But I would imagine at one point in time, they were probably almost 100% of market share, right?
Oh, for sure,
There was
right,
almost
yeah.
no other player in town that was near the quality, the amount of updates, the amount of...
Oh, everybody knows who Adobe is. Right?
Absolutely.
Everybody
Right?
does, yeah.
Tiffany, which I didn't buy you anything. We walked past a Tiffany's a couple of times today, but you just... I knew you weren't going to plug the microphone in, and I thought, you're just not... You're not Tiffany worthy.
Oh, that hurts.
Yeah,
that hurts.
I was gonna get you a nice diamond encrusted butterfly brooch.
Oh, nice.
Yeah, you
nice.
can wear it.
Sad now.
Yeah, I know, right? $1.67 beat the street by 3 cents. 1.33 billion in diamond and gold sales. Beat the street by 20 million, up 8.1% year over year as people like being adorned in the luxuries of life. Just
Gold and diamonds.
the warmth. Right? Just a light off the prism. Just
yeah.
Let suntan your pancreas. $97.51 down on earnings. Inside joke.
Yeah.
Comparable store sales plus 1%. So comp store sales not growing. The estimate 2.7%. That's down. It was up only 1%. Pretty significant. Comp store sales in Europe down 8%. Comp store sales in Asia down 1%. Made up a little bit in the Americas, up 4%. As things are doing well and people are buying the diamonds, and you're doing well and I'm doing well, and the podcast is done.
Done.
That's the end of it. For a market. A week that was a little bit slow, I felt like we still got some decent conversation.
For sure. Yeah.
Tariffs.
Yes. Really took up the market.
Yeah, that was really the big talking point.
Tariffs and porn star allegations.
Yeah, that was all over television.
Everywhere. Yeah.
I only see the TV at the I don't have
at the gym, right?
I don't have a TV.
Yeah.
So I'm always very shocked. I walked into the gym and there's 3 different channels, and I forget there are 3 channels.
I'm always cruising like CNBC, and that's like the main thing that's on there is always like something like that. Always something like that.
Really?
Any media outlets
That
always
seems,
like Trump.
CNN's that's at the gym. A lot of CNN coverage.
Yes, yeah.
Well, I'm gonna ignore that because that really doesn't affect the markets at all.
No.
And I don't really care about salacious media garbage.
No,
I don't gossip in my own life, let alone gossip about people I don't know.
Stuff.
Yeah. But it was a nice podcast.
It was.
I enjoy hanging out with you.
Number 2.
It was a long day of arduous
it was
self-exploration.
Yes,
something like that.
Yes,
But it was a pleasure doing this again with you. I'll be
Definitely
back for number 22 next weekend.
Yes, next Sunday.
I'll bring my work hat and lunch pail, and we'll get down to it. And we'll see if we can knock this market out of the park once again.
Yeah.
Like we do every time.
Number 22 will be done on my birthday.
I might be a little old for my age, but I'm quick for my age, Chief.
Yeah.
Absolutely.
Oh, yeah.
So your birthday next week?
Next Sunday.
Next Sunday is your birthday.
Yeah,
I'm gonna come in my birthday suit.
Nice.
Give you a little present.
We'll do it in our birthday.
Jump out of a cake.
Yeah.
Doctor.
Yeah.
You have yourself a marvelous week. You guys out there, thanks for tuning in this week on Wall Street, number 21. We're happy that you guys always tune in. We're sorry this got up a little bit late, but what are you going to do, right? Exactly. Have yourself a good week. Try to make yourself some money out there. We will see you next Sunday. Stay cool, but you won't stay as cool as me. Maybe you're old. Maybe you're old. That's what it is. Maybe you're old.
Maybe I am. Yeah, I am old.
Somebody's old. It's not me. Or at least stop telling me I'm old. Have a nice week, people.
Bye.